Morning, and welcome to our second episode in our very first series of ETI webinars. We hope everyone had a lovely rest of the long weekend here in South Africa. Once again, let me do a brief introduction for anyone joining us for the first time. My name is Desmond, and I'm the Customer Experience Manager here at SimplePay. What that means is I manage the customer side of the business. Joining me today is Musa, Jamie, and Sherlyn. Moose helps to ensure that the customer experience team is maintaining our high levels of service by auditing our team's client interactions, while Jamie and Sherlyn are our customer success consultants. So what that means is they're there to ensure that customers are utilizing SimplePay to the full extent of its abilities. Before I hand over to our success team, let's take a brief look at what we'll be covering in today's session. First, Musa and I will be covering some of the questions we weren't able to answer last week. Then we'll handle qualifying wage, ETI remuneration, and calculating ETI. We'll also briefly touch on ETI reports as well as COVID ETI. But before we get stuck into it, let's hand over to Jamie and Sherlyn so that they can take us through some of our house rules. Let's start with some of those questions that we missed last week. The first one would be, will ETI be recalculated if you have not changed the basic hourly pay rate?
Thanks, Desmond. So on SimplePay, as you are aware, that we set effective dates and we set data, then we lock that information either through finalizing or saving. And unless that information is changed, like your effective date is changed or your hourly rate is changed, the system will not recalculate any values because there's nothing to recalculate. So in essence, the only way to make any changes or recalculate values is if something has changed. So I do know that annually the minimum rate for the minimum wage can change. So each year you would have to go to your company settings to update that minimum rate if you set it as an hourly rate.
Okay, that makes sense. And then the next question is, will employees earning commission as a source of income qualify for ETI?
So there are two questions that were asked that I feel would be more beneficial if we actually went through it on the system as a live example, as we go through the definitions of qualifying wage as well as remuneration, and then also a setup similar to the parameters of an employee that was paid per shift. So if that would be great, then let's get into that.
I just want to cover both questions so that we have, the one is, will the employees earn commission as a source of income qualify for ETI? So just commission, that's one that we're going to cover. And the other one we will still cover is, how should the ETI parameters be set up for employees who are paid per shift, i.e. 300 per day, like waiters at a restaurant. That was the example given. So those are the two things that we'll be covering with one of the employees. Cool. So Musa, let's kick off immediately where we left off last week. Let's look at the filing information for our submission for March. Let's start with where we left off immediately with last week. And then let's talk about the ETI calculated for Monica and Peter.
Yes. So let's have a look at Monica. And what you've done now is actually looked at the ETI trace. This is SimplePay's validation and checks, as well as calculations for the employees to give you a breakdown on how the system calculated the ETI amounts. So Monica has a very straightforward calculation. Let's have a look at Peter Parker as well.
Oh, wow. That's not straightforward, Musa.
Yes.
Yeah.
So there's a few factors that has influenced Peter Parker's calculation. So let's go through the very straightforward one of Monica's first, so that we have a base understanding. Okay. So when we've set up Monica, we had to ensure that there were certain criteria that were met. So the age between 18 and 29, and we also said that SimplePay checks 4 criteria, which is your age, whether you are South African, etc., as well as your remuneration that you've earned. So this is just a recap of the fact that this employee was qualified between the ages of 18 and 29. Then what we also did was, when we set up ETI, we also set that when it was effective from and certain other criteria. So using that information, the system is checking which ETI rule it needs to apply. So do you perhaps have the ETI help page calculating ETI open?
Yes, I do.
Okay.
Is this what you're looking for? Okay.
Exactly that one. So ETI, this ETI table page gives us 3 tables. The monthly remuneration, because ETI, the amount of ETI you get is based on how much you've actually paid the employee. And then also ETI split up into a 24-month period, split between the first 12 months and the second 12 months. So, and there are different rules that's applicable, whether you're in the first or second 12-month period. So what we can see is that for the ETI period, for the first 12 months, there's a rate factor of 75%. So for your first ratio of between 0 and 1,999 Rand, you would get 75% of the remuneration as ETI. Then
I'm following.
The second window is between 2,000 and 4,499 Rand. SARS has specified you get 1,500 flat. And we can assume that that is 75% of the minimum of 2,000 Rand. And then the third bracket is between 4,500 and 6,499. And it's using the maximum amount minus a certain calculation. So that as the more income you've earned, you get less ETI. But it still uses that factor of 75% in the calculation.
Okay, let's take it to one of those employees, right? Because what you said now is a lot of information. So if we could look at Monica and then look at Peter, because Monica is really straightforward, I think that would help me at ease a little, because it does look a little alarming at the moment. Cool. So let's do with Monica. Yeah.
Okay. So it's applying the ETI month rule for your first 12 months, because this is still less than month 13.
Yes.
And then the factor that's being applied is for your first year rule, which is 75%. Then what? So in your first year, remember on that table we just showed, it uses that 75% ratio.
Yes. And Monica is the one who took a break in her first year of employment, right? She was over a 3-month period. That's why even though we're in March and it would be anniversary, because there was that break in where she didn't qualify for ETI, but now it lengthens almost the period, right? So we're still then in the first 12 months. Okay, I'm on track. So I get that. That's the factor. Next.
Right. Then it's applying the rule for the remuneration that she's earned between 2,000 and 4,499. So she gets the maximum incentive of 1,500.
Oh, wow, that's pretty straightforward, right? She falls into the second bracket, so 1.5. That's what we can claim for ETI for.
Yes, fantastic. And because SimplePay does all of these checks and calculations for you, you wouldn't need to manually try and figure all this out for yourself.
Okay, so we have the first half of the calculation now. I get that. Now we're going to move to the more challenging ones, right? So Peter.
Yes.
Parker. Okay.
So Peter Parker, we have still the same checks done, but it's going to look at all of your qualifying criteria, such as your wage, as well as how many hours you've worked for the month. So what I'd like you to do is go to the qualifying wage help page that you have open, please.
Yes.
So SARS has defined that your qualifying wage is the amount that you earn or that you are paid for your ordinary hours worked. And your ordinary hours are defined as 160 hours for a full month. So if you work less than 160 hours for the month, as prescribed by SARS, then there is a gross up factor, because we have to gross up the wage as if an employee worked for a full 160 hours. So that's why we have that gross up fraction. So now that is telling us that Peter Parker didn't work the full 160 hours. So let's have a look at his setup. Can we go to his regular hours, please?
Yes, I got a little too excited. So we're going to go back to employees, then Peter Parker. We're going to click on edit info and go to regular hours.
Fantastic. So now we can see Peter Parker is set up to work 4 days a week at 8 hours a day. Can you calculate how many hours that is for me, please?
Okay, let's start with, can you see my calculator?
Yes, I can.
Great. Okay, so now we have hours per day, that's 8. We're going to multiply that by 4. So that's here at the bottom. It shows us full days per week. That's 4. And then that would be 32. So he's worked 32 hours in 1 week. Then we have to do it for a month. So I'm going to multiply this by the average weeks in a month, which is 4.333. And that's a simple 52 divided by 12. Right, so that's what gives you 4.333. So, according to my calculator, Peter has only worked 138.66 hours. I need to write that down.
Yes, please make a note of that.
138.6656. Go.
So now we need to find out what the fraction is of the month that he's worked. So we're going to divide that by 160 hours.
Okay, divided by 160 hours.
Okay, so that...
Yes, Moose? I'm going to write, you explain what that is.
So that's giving us a fraction amount of 0.8666.
Yes.
So now let us go back to Peter Parker's ETI trace, please.
Oh.
So SimplePay has rounded off the number to 0.87, but that is for display purposes. In the back end, the system is still using the 0.866 as the accurate number for the calculation.
Okay, that makes sense. Otherwise, there'll be a lot of decimal values on this calculation, right? And then what overwhelmed me initially would be more overwhelming. So thank you. I understand why it's now for display purposes rounded up. Okay,
fantastic. So now when we use the gross up fraction, we're dividing the 4,000 salary that is earned for the month by the gross up fraction of 0.8666, and that gives us a monthly salary of 4,615 Rand 38 cents for if he had worked a full 160 hours.
Okay, so Musa, just give me a second. I like to double check things. So it's 0.8666. Those 4 sixes equal, so it will be 4,615 with 42 cents.
So that is because we didn't use the exact fraction. So if we added another 6 at the end, it would have become more accurate.
Okay, let's clear that quickly. So I mean, mistakes can happen so quickly then, right? And like at various different points.
And now that you went again with 4 sixes, 5 sixes decimal.
Sorry. 4615.38 divided by 0.86666.
You were supposed to use 4,000 Rand as the salary.
Oh wow, I'm definitely all over the show. Sorry, Musa. 0.86666. Right? No, one more 6. Oh wow, that's spot on. Okay. We there. Sorry, Musa.
Okay, no worries.
Wow. Okay. So yes, we have that number. We can now calculate it ourselves. So we have remuneration sorted. What's next?
Okay. Then, as it did with Monica, it checked which ETI month it is, and this is for the first 12 months. And then it used the factor of 75% as well for the calculation.
Okay.
We then looked at the remuneration that this employee earned. And because the grossed up remuneration is greater than 4,500, it fell into the third bracket of our table.
Oh, okay. So the monthly remuneration referenced here would then be the grossed up value, as if he worked for the full period. Okay. Okay, cool. I'm following. Let's get back and my calculator open. Right.
Okay. So now we need to do this calculation. And do you remember BODMAS from way back in the day when we were in school?
Yes, I do actually. So BODMAS stands for brackets of division. You see, I need to write it out. Okay, I got it. So it's brackets of division, addition, and subtraction.
Multiplication, addition, and subtraction.
It's been a really long time. Okay, but yes, so we use those basic rules for mathematics. Okay, so then what do we do next?
So now using the rules of BODMAS, we're going to complete the formula. So we're going to take the grossed up salary minus the third bracket, the base of the third bracket, which is your 4,500.
Okay, cool. So I'm going to put in the big number first. So we're dealing with the brackets first. So 4615.38. We're taking away 4,500, and then we're left with 115.38. So I'm just making a note, 115.38. Cool.
Okay. And then we apply the factor of 75%. So it's going to be multiplied by 0.750.
Okay. Okay, yes. And then?
So that tells us the amount that we need to subtract from the maximum incentive to calculate the ETI amount. So now we subtract from 1,500 that 86,535.
Okay, cool. So let me use memory plus. So we go 1,500 minus memory recall. That was not the number. So again, like your calculator skills need to be on point. 1,500 minus our number of 86.535.
Yep. And that is our monthly ETI amount.
Okay.
So that is the amount of ETI for the full month. Now, because Peter Parker did not work a full month of 160 hours, we now need to gross down that amount of ETI to the amount of hours that he's worked. So we're going to multiply.
Okay, so you can't actually claim the full amount, right? Because we grossed up to determine the monthly remuneration if he worked for the whole month. Now, when we claim for ETI, we need to actually bring it back down to what it was by grossing down. Okay, I get that.
Correct. So now we're going to multiply that by the 0.866666.
So we divided first, so now we're multiplying. It's the inversion of the fraction. Okay, following. So 0.8, and then we had about
5 sixes.
That's still 4. One more. Yes.
There we go.
Oh,
and
that's spot on. 1,225 rand, and then the 00, the 20 would not be displayed. Okay, that's very straightforward. I mean, that's not as alarming as I first thought. When it loaded, it actually makes sense because it's going through all the steps one by one. That's pretty cool. Thanks, Musa. I understand that.
Awesome. So this example also showed us that along the way, it's quite easy to make a few mistakes on the calculator. So SimplePay is taking away that likelihood of mistakes. So yeah, there you go. It helps make it a little bit easier for you.
Yes, and so, like it does reassure me that SimplePay is on top of the calculation, so that if I it was so simple mistakes that I was making, but like it definitely then makes me feel better that I can come back in my EMP 201 and actually double check the calculations. I'm happy that you guys are displaying this. Thank you, Musa.
Awesome, you're welcome. So now we have another third employee that we need to set up for ETI. And we're going to factor in the 2 questions that were asked earlier about the commission, as well as paying him a daily rate. So let's click on Mr. Tony Stark.
Hey, Iron Man. Okay, cool. So Iron Man works fast. Nice.
Okay, so the first thing that we need to do is make sure that we set him up for ETI. Do you remember how to do that, Stoll?
So we don't have to do settings because we already set ETI up for this company. So what I can do is check the ETI for this employee to see if they qualify. Then I don't have to do the manual checks. The SimplePay checks for me. So Tony does qualify for ETI, but we're not claiming currently. So if I remember correctly, all we have to do is set him to qualify claiming. We didn't set this up for anyone else. And then let's do the 1st of April because I know we finalized March basic already for Tony Moose. So let's only start claiming ETI from April for him. So I'm saving.
Excellent.
Great.
Okay. So now we know we've set him up for ETI. So now we
Yes.
actually need to pay him. So let's say Tony's given us some memorabilia to sell and he's getting commission for that. So let's give him a once-off commission of say 5,000 Rand.
Okay, so we got lots of people to buy his broken suits. Nice, 5,000.
Spare parts is good.
That's true. If you have a Iron Man suit, yeah. Okay, so we have the once-off commission that falls. It's about our minimum wage that we set, the 3.8, and it's below the top bracket of 6.5. So yeah, we enabled ETI, so ETI should be there, right?
It should. So let's check. So let's finalize these payslips. So let's go to pay runs and finalize the April payslips for everyone.
Okay. April, that's right. Finalize. We happy? Yes, I'm gonna do all of them. Everything looks good. Cool.
Okay, fantastic. So let's check on our MP201. Let's go to filing. We're not paying anyone just now. We just want to check what's happening on our MP201. So let's click on the web view for April.
Yes.
And then click on our ETI amount that's calculated.
Okay.
So now we can see Tony Stark has not had any ETI calculated. Let's have a look at the trace to see why. So we can see that he was qualified for his age, but he was disqualified for wage. So that means commission does not fall part of the qualifying wage criteria. And the reason for that is the definition for qualifying wage is the amount paid for ordinary hours of work. So that would be your basic salary or your normal hours if you're an hourly paid employee.
I see on our help site, we also break it down. So there's various items that then impact this. Okay.
Yes. So for a salaried employee, your wage would be your basic salary, less any unpaid leave, less any short pay. And for hourly paid employees, it's your hourly pay, your normal hours worked, your leave pay, or any amounts paid for public holidays that were not worked, but falls within a working day.
Okay, so Musa, I know in some instances with commission earners, oops, that's the wrong employee. There is normally some businesses that will pay a basic and then commission on top of that, right? So let's change Tony's compensation package to maybe use one of those examples. So I'm going to go back to Tony for us quickly. And then let's say, like we need to add different items for him. So yeah, you go.
So I'm thinking, let's pay him as an employee that gets paid per shift or per day. So let's go to our, because SimplePay only has by default a basic salary or hourly paid option. Let's create a custom income item for what we want to pay him. So we go to settings and we click on custom items.
Cool, custom items. I just opened it in a new tab to make it easier for us to navigate quickly. So I see we have 3 custom items created. There's birthday cake or pool equipment, and then daily rate. That's the one we want, the income item. Okay.
Yeah. So when you're creating income items, you can add a name for the item, and then there's a selection of input types. So this defines how the item actually behaves on the system. So for our daily rate option, we're going to select the option custom rate times quantity, because we're going to specify how much we're paying him, and we're going to specify that the quantity is the number of days. So when we selected that option, it gives us another field for hours work factor, and this is very important. Can you take a guess why it's important?
Because I think it tells the system how many hours the employee would have worked to earn one daily rate, right? So if we add 1 in the daily rate field, then it's telling the system, hey, this person worked for 8 hours, right? Like,
exactly
I feel like oh,
cool. Spot on. So there's more. We've already created this item. It's been set up with 8 hours as the hours work factor. We've also ticked the box different rate for every employee, because each employee could have a different daily rate. So we can use this item on different employees.
Okay.
And the next important thing is that we need to inform the system that this income item will affect the wage for ETI purposes.
Okay.
If
So
that
that's
item is not picked, if that item is not ticked, what do you think would happen?
the system wouldn't know that we want to use this custom item for ETI purposes, right? Like it wouldn't be aware. And then Tony, no matter how many days we then capture, Tony would never earn, or we'd never be able to claim ETI for Tony. Okay, so I'm happy with the way this item was set up. Is there anything else we need to set up now?
That's it for the daily rate item. So let's go back to Tony and start paying him.
Okay, cool. So because it's an item that we set up in line with best practice where we can use it for multiple employees, I think it's going to be under regular hours. Yes, here it is. So daily rate is custom. Okay, what do you think the daily rate for Tony should be?
So let's pay him a daily rate of 250 Rand.
Okay. Yeah, okay, done. Next.
Okay. Then we're going to pay him. How many days has he worked for this month?
Oh, we are May. So Moose, I think we should actually unfinalize April, right? I haven't paid him yet. No money is left our bank account, and we're still working in that period. So I think we just need to go and unfinalize April.
Good catch.
Yeah, because we're still working in this period. Okay. So we were busy capturing the amount of days Tony worked. So let's do that. How many days did you see Tony in the office, Moose?
I think I saw him about 20 days. He was here most of the month. He needed to work hard this month.
The world didn't need any saving, right? So he's been in the office. Tony and his stories. Great. Okay. So now we see that the income is very high also right now.
Yes. So remember in our previous session, we said there's a difference between wage, qualifying wage, and remuneration. So recapping on our definition of wage, wage is used to determine whether this employee qualifies for ETI, right?
Okay. Yes.
So his wage is 5,000 Rand. So he would qualify for ETI. But then remuneration is what is earned and what we are paying him with his salary and extras like allowances, commission, etc. So his total remuneration for this month is 10,000 Rand. So we know ETI is limited to employees that earn 6,500 and below. So if you're earning more than 6,500, even though you qualify for ETI based on your wage, your remuneration is higher than that limit. So no ETI would be calculated for you.
Oh, okay. So I think there's a big difference between the no ETI being calculated, because that means SimplePay still does the calculation, right? But then because it's so high, the income, it's over the 6.5 limit, that then like reduces. So the more you pay the employees, the less ETI you can claim for this, right? Okay.
Exactly that. So let's change his once-off commission to 1,000 Rand.
Oh, he's not going to be happy we sold the suits for 1,000 Rand.
They got a lot of damage in his last fight, so not much we can do.
Okay.
So let's finalize.
Yes.
Yeah. So let's finalize this payslip and then check the impact on our EMP201.
Okay. So just before we do that, I'm happy. I see that the daily rate is at 5, so he's going to fall for the wage. That's fine. And then with the commission, he's only going to be moved into that final bracket. So there still should be ETI calculated. I know not a lot, but there still should be some. Okay, so we finalize that, and then let's go back to filing. Let me close all these other tabs that we don't need anymore. We're done with March, so let's look at April. That's when Tony. Cool. So there's definitely a change in the ETI, but with 2,000 something last week and today. So let's click on the trace.
So now there's an amount for Mr. Stark. So let's click on that and see how it was calculated.
Okay.
So it's again similar to Peter Parker. There's no grossing up factor because he worked the full month. So 20 days times 8 hours was a full 160 hours for the month. Okay,
but Musa, in the case then where we're using daily rate, does that still mean that we need to set up the regular hours to display what we want?
So the regular hours is most important for employees that earn a fixed salary because you're not capturing hours anywhere. However, for hourly paid employees or employees that are paid with a daily rate, because you are defining how many hours they physically work through whatever you've captured, that hours are used for the calculation.
Okay. So the system is then looking at that rate factor we were talking about, right?
Yes.
To determine then the hours. Okay, cool. I understand. I'm happy. That's why there's no grossing up or grossing down. It's a shorter calculation, similar to Monica, but it's using the last bracket again. Okay.
Spot on.
So I just want to double check my with the calculator. So give me a moment.
Okay.
So we put the big number in first. We do a BODMAS. So it's 6,000 minus 4,500. That's 15. We're multiplying that by 0.750, and that gives us 1125. That's
correct.
Number sounds familiar. 1125. Okay, and then we're taking 1,500 minus 1125. Oh, perfect. That's
There
it.
we go.
That's so simple.
Yes.
Wow. Okay. Cool.
So,
what's next?
So yeah, it's actually very, very simple when the system takes care of all the calculations for you. Another way to check up on your ETI amounts that you've reported, and as well you can report over a period of time, is using our ETI report. So if you click on reports and then click on ETI report.
It's just processing. And I'm going to do it for April, right? Because we want to look at Tony now. I'll pull all 5 employees. So yeah, let's just take a basic report and then open it up. Then Moose, I just need you to confirm that you can see the Excel.
Yes, I can.
Great. Cool.
So the report is fairly straightforward. It will give you your list of employees, it will tell you the date range that you have reported on, and then it will also tell you the month in the second column that is being reported on. Then it will tell you how many hours the employee worked for that month. So we can see Mr. Parker worked 138 hours.
Yes, yes, he doesn't have normal hours. Yeah, we covered that. Yeah.
Then it tells us what is the remuneration that the employee earned, the monthly remuneration.
Yes.
And then we also have the minimum wage that's been defined, and then the actual wage that the employee earned, and the ETI amounts that were calculated. And also importantly, the report tells us in which ETI month the employee is in. So Monica is in month 11 now for April, and Tony is in month 1, whereas Peter is in month 2.
Okay, cool. I think that's pretty straightforward. So I'm going to close this now. And then the only other thing I think that's on our list to chat about today, Musa, is COVID ETI. So additional ETI. Okay. So for me, like, it's a very straightforward thing because additional ETI only affected 8 months, really. So 4 months in 2022 and 4 months in 2021. And the things that it impacted wasn't any calculations. It was the age limit and the amount of ETI months you can claim for employees. So in those 8 months in particular, you were then allowed to move to month 25, 26, 27 with certain employees. And then employees older than 29 would have also been included, right, Moose? There was no changes in calculation.
Correct. So this was just an additional ETI. So employees that still qualified for the regular ETI would have gotten the regular ETI plus this additional amount. And those that never qualified for the regular ETI would only get this additional ETI for COVID.
Okay, cool. That's pretty straightforward. I think we've covered everything. So back to Jamie and Shola for some questions.